Sandip Sabharwal joining us as well this morning. Sandip, this eternal debate with regard to how should one play defense, right? Do you play through the large cap names? Do you play through the mid-small names? And who will the biggest beneficiaries be of the emerging profit pools, especially on the export side of things? How should one play this theme?
I think there's a set of strong public sector companies like the leaders among them is Bharat Electronics, which has done well over the years and which is a stock we also hold. I think that will do very well over the years as many Indian-made products also get demand from other countries and overseas sales also start, and some of the orders could be substantial and the order booking outlook also is good. Then you have companies, other defense companies like HAL, which is not a very efficient company, but post correction valuation not very expensive. But then again, their delivery, the way they've been operating has been inefficient. Then there's a whole host of smaller private sector companies where valuations are, I would say, obnoxious today. Like the valuations of 100 to 200 P are not justified. And post the Iran deal, and if the entire deal actually holds, we could actually see some interest shifting from defense to other economy linked stocks because defense came hugely into, like the defense plays were bought hugely as the conflict started and a lot of the other parts of the market underperformed. So I think that's how broadly I would see the sector.
The other sector, Sandeep, has been pharma, and that's already significantly outperforming, some of the broader market contenders as well. But when you look a little bit deeper, would you say that this is an earnings story? Is it more a macro-driven story with, the way the US dollar is moving, tariff, pricing, etc.? And where is it that you now see the profit pool building up within pharma if someone were to buy afresh?
The pharma has a few large cap companies which all of us know about, Cipla, Reddy, Sun Pharma, etc., who continue to do reasonably well, but there's nothing exciting in the story per se. But then the valuations are not very expensive also. Then there's a whole emerging theme, or it has also played out a bit on the CDMO side, etc., where they are smaller companies. So I think those are the ones where there has been more excitement, where stocks have moved up sharply. So I personally find it very tough to analyze these companies going molecule by molecule and trying to analyze what's happening. But I think that's a theme which most of the investors are playing.
Sandip, how do you look at private sector banks at this point in time, especially an HDFC Bank? We've seen some, buying interest coming back into private sector banks there. How do you look at ICICI and HDFC Bank?
Well, I think the entire set of private sector banking pool will do well because credit growth trends are pretty strong. And as credit growth picks up, we will see the profitability growth also being more rapid. The cycle of rate cuts by the RBI and the Monetary Policy Committee is also behind us. So I think the squeeze on NIMs also is largely behind us. The FCNR fundraising, if it actually turns out to be 50 to 60 billion or more, will be very positive for the banking sector overall because it brings in our deposit pool, which is absolutely essential today because the gap between deposit growth and credit growth has been growing. So I think that could help the banks this year bridge that gap. So overall, the sector looks good. Now, the pick of stocks is people's choice. So HDFC Bank has been a huge underperformer. So it's possible there could be some comeback especially if foreign funds flow into India reverse. The leadership remains with ICICI Bank. And then you have other banks like Kotak, Axis, etc., which should also participate.
Interesting. Okay, Sandeep, hang in there. Lots more to talk about.
The other one, which really stands out, is Info Edge, that they've been silently and publicly, but silently nonetheless, making investments in AI and deep tech. They've made roughly 4,700 to around 5,000 crore worth of investments over the last maybe 5 to 6 years, which are currently at market value, standing at nearly 41 to 42,000 crore in terms of market value. Of this, 3,600 crore was the investment which they made from InfoEdge itself, which the company has made. Now, the market cap of the company is around 65,000 crore, owns Zomato plus PB Fintech, plus all of these investments available at 65,000 crore. Looking interesting.
Well, I think the entire story in InfoEdge has been this only, like the core business segments, which is the operating part of the business, has not been doing as great lately. But the investment pool and the valuation of those investments is the thing which holds the stock price up, and that's what drives the stock price. So I think that's more than factored into the stock. So I don't think this is anything new we are learning.
Kunal, on charts, curious to know, how does InfoEdge look right now?
Yeah, it's a stock which is still trying to come back into a recovery of sorts. We've seen InfoEdge or Naukri going through a very sharp correction. If I'm not wrong, I think start of 2020 itself, the stock was almost at 1,300 levels, price adjusted, and has now fallen down to sub 1,000 mark. 2024 high for the stock was 1,800. So in the sense of the last 2 years approximately, the stock has been consistently falling or showing signs of weakness. It's just that in the last 1 month or so, the prices have plateaued and you've seen the stock just stagnating around this 1,000 mark. Volumes have inched up higher, but no major signs of a reversal which has come back into the stock. We need to see a breakout of 1,000, 1,050 levels for the stock to try and come back into a recovery mode. But till that time, I'll just sense that maybe this could be a broad-based consolidation or a time-wise pause the stock is going to.
Bunch of other buzzers from yesterday, and I want to talk about a delivery that saw a spur of about 5%. Typically, you don't see the stock being, one of the top 5 movers within the F&O pool, and it leapt up a solid 5%. Mankind was your top performer from amidst the large caps. Of course, it was Cipla, which was really gaining ground. And there was an REC and an AB Capital. These were all the other names which also held out. But Kunal, on the charts, Mankind and Delivery both.
So I'll start off with Delivery because that's a stock which I strongly sense that is heading towards a very strong breakout. I was looking at this chart almost 12 odd months back. The stock was at 300, 330 mark. Where on the monthly basis, on the quarterly basis, there was a huge volume setup for the stock. The low was formed for the stock, and then gradually it started off to move up higher from those 300 levels to initially 400 mark. For the start of 2026, the stock plateaued around this 400 levels. And now it's moving up or inching back towards a breakout closer to 500 levels for Delivery. So I sense, that this could be a stock which can continue to move up higher. It's completing multiple patterns on the bullish sides. The indicators have come back towards a positive on the monthly charts. So this stock I'd be bullish on. Mankind Pharma, I would sense that this could probably be a point where many of the stocks in the very similar space have shown signs of recovery. Yesterday, the volumes for Mankind Pharma was also on the slight higher side. You saw the stock moving up from 2,400 to 2530, 35 where it closed yesterday. The volumes were slightly higher. I call it slightly because almost like a month back, there was almost 36 to 38 lakhs of volumes for the stock price as compared to yesterday where the volumes were just about 9.5 to 10 lakhs on the stock price. So we need to see more evidence that the stock breaks past on the back of a cumulative set of higher volumes. But the chart setup so far on the price basis looks to be on a positive tone.
Kunal, another set which was very, which is active today is the, the telecom pack, Vodafone. There is conversion, there's issuance of warrants to the promoters there. Things are aligning for Vodafone from a regulatory point of view and now from a balance sheet point of view. How do you look at Vodafone from the charts point of view?
See, I'm very on the stock. So even though in the last, I think 1 month or so, it's plateaued out, it's not moved that much because comparatively, Bharti Airtel has moved some 10% from 1800 levels to 1950, 60, where the stock is trading right now. Compared to that, I think Vodafone Idea has been a little bit more quiet, more sideways. But I sense that the stock is holding on to its range of 14 to 15 in the last 1 month. So it's not gone into a sharp correction. The volumes which had moved up high, which had moved up because the prices moving up from those 9.5, 10 levels for Vodafone Idea towards 14, 15 mark for the stock price. Those cumulative set of volumes are still on the positive side for the stock price. And I've seen this stock over the last many years that there is a tendency for the stock to go into a very subtle side of an uptrend and then move on to sideways for 2 months, 3 months, 4-month period. And then all of a sudden the stock confirms a breakout and then starts to move up higher. I sense Vodafone Idea could probably be one of the stocks in this category. Very bullish on the stock, even at the current juncture. The time frame of say 6 months, 1 year plus, I would look at least 18.5 to possibly even 20 for the stock as a potential target.
Okay, on that note, let's take a very quick break. We'll come back and we'll continue our stock chat with Sandip Sabharwal as well as Kunal Bothra. But Sandip, you're not convinced about IT yet, right?
No, because I think they are somewhat behind the curve still, and the growth trends still don't look attractive. And the latest read through which we got from Accenture results also doesn't indicate anything great in the near term. So they still remain significantly cash generating companies, but that cash needs to be put to use to generate higher future growth, which is happening in bits and pieces in some companies, but largely not being done by most of the companies.
Sandeep, even at 12 to 13 times 1 year forward earnings, they don't look attractive?
They definitely look attractive at the current valuations. The key is that the triggers seem to be missing. But then sometimes at absolute sell-offs and at levels where the valuations are very attractive, you don't have a trigger and the stock can actually do well also. So I think it depends on people who are willing to take a contrarian bet and who can't find ideas outside this sector. So I think there could be better ideas outside this sector, but that said, it's possible that suddenly the sector starts performing and gives 15-20% return also because of the way the sell-off has happened.
Right. Okay, let's welcome on board BV Rudramurthy as well. Rudra, hi, morning. Do you sense that there could be a material bounce, 15 to 20% from the current extremely sold levels on IT names?
Good morning, Aisha. Thanks for having me in the show. See, definitely, yes, IT is showing signs of bottoming out. And yes, you have to buy very selective stocks there. And you can see that relative strength which can come in IT. But then I will still say, unless you are a long-term investor and who wants to bet contrary to market, then only have to pick IT as a sector. If you are a very short-term trader, not having that 2-3 year kind of a longer time frame, better still to avoid IT. But some of the names which are looking very good to me are Forge, Tech Mahindra. So these are very selective stocks, even Oracle Financial. So you have to be very, very choosy if you are into IT, and only if you have a long time horizon, then only look into some of these names which I told you.
Rudra, how do you look at some of the defense play today? BDL, BEL, HAL?
Definitely, defense as a theme looks very, very strong. In fact, yesterday was the first sign of bottoming out and stock consolidating and giving a breakout on shorter term time frame. I will definitely look at two themes at current market price. And if I have to pick, yes, defense is one of them. And even pharma is showing that signs of bottoming out. Then yes, you have to be very selective there. Definitely stocks like BDL and even for that matter stocks like BEL looks very good to me. And defense, even Bharat Forge yesterday was giving a very, very good technical chart breakout, and that stock looks very good for very short term trade too. So these are all some of the names which are available in futures. So stocks like Bharat Forge, BEL, BDL looks very, very strong. And definitely that is one of the themes which I like a lot.
Okay. Sandeep, some of the, within the manufacturing space, what is it that you're liking? Is there a specific theme that you're playing?
Not so. I think it's a whole host of companies across sectors. So I think there are like Bharat Forge is a stock which we have held for long because of its aggressive foray into non-auto segments and the success they're having there. Then there are companies in the power equipment, power transmission sector. There are companies in auto ancillaries. So I think or power equipment companies like BHEL, etc. So I think there's a whole host of companies which have got momentum riding with them. There are some companies where valuations, I think, have become unsustainable in this segment despite the growth, like Hitachi Energy, GE Vernova, etc., despite the good growth outlook. So people need to be cautious at what valuation they're buying stocks.
Yeah, the one, Sandeep, that you've tweeted about, and you've tweeted about just a few minutes ago, massive crash in most crude-linked chemicals and plastics. PVC prices cracked to below pre-war levels. Of course, negative for PVC companies, you reckon?
Yeah, so I think there'll be significant inventory losses which will come through this quarter, and I think if the price stabilize, maybe not next quarter, because many of the companies had inventory gains, like the PVC pipes, the entire manufacturing chain, and for many of the other plastic or chemical linked companies. So I think some of these companies reported strong results last quarter because of inventory gains, and those will convert into inventory losses this quarter. So we could see a flip side loss on those fronts, and the results could suffer.
And, you know, in any case, Sandeep, some of these companies have seen a difficult period, right? Last few quarters, it's not been easy at all. Could this pain actually be prolonged, and how should therefore one look at valuations as they stand today?
Yeah, I don't think so. It depends on what you are playing. So I think for companies who are consuming these products, they'll have an inventory loss this year. But I think lower prices, and if they pass on the prices, the demand pickup could actually be there, because the demand also got impacted when the prices shot up so much. So I think there are two parts to it. One, immediate inventory losses. Secondly, because of falling prices, many of the product companies who are consuming these will actually see a pickup in demand as prices fall. So I think so these have to be played two ways. So immediate term could be cautious. Longer term, actually, we could see better growth.
Okay, all right. So that's the take coming in from Sandeep. Thank you so much, Sandeep, for joining us this morning and giving us that perspective. Okay, let's move on. Rudra, what do you make of some of the platform companies, PB Fintech, Paytm, and the like? How are they looking like on charts? Even a MobiKwik, if you have a view.
Harsh, very good morning. First of all, yes, platform company as a theme looks very, very good on chart. But the thing is, I'm picking a different name from the list what you gave. And for me, Eternal looks very, very good. In fact, that was one of my bets for today. And stock pick, yes, Eternal at around 240, 250 made a consolidation, made a strong base and gave a move beyond 260. And now the stock has again consolidated, which is a very good sign. So I'm looking at targets of 285, 300 to come. And Eternal looks the strongest to me among all. But definitely the names what you mentioned like PB Fintech, Paytm, MobiKwik, they all look good. Nykaa even looks very strong to me in that category. So for me, yes, Eternal, Nykaa, they are my preferred stocks. And even the rest of the stocks also look very strong to me. And yes, platform companies can do from these levels, and after a huge correction and consolidation, they are showing this sign of bottoming out and then moving up. So for me, they look very, very strong, and I will pick Eternal and Nykaa as my top two picks from the same theme.
Rudra, hi. Aside of the platform companies, how do you look at the NBFC companies now? Bajaj Finance, Tata Capital.
Definitely, again, this is another theme which is looking strong. See, one thing is very, very clear before I speak, because right now we spoke about IT, we spoke about platform company themes, and now talking about NBFC. For me, overall market has completely changed its texture from sell on rise to buy on dips market. This, let us be very clear. Until we hold Nifty levels of 23,800, I will use every dip as a buying opportunity, and 23,800 will be the line on sand. Until we hold those levels, yes, some of these themes like defense, NBFC, and even select IT companies, mid-sized PSU as well as private banks, they all look very, very strong to me. Yes, two stocks, if I have to pick from NBFC, it will be Bajaj Finance and even Chola Finance. Both looks very strong, and very recently it has consolidated and given a breakout. So I will use every dip in these stocks like Bajaj Finance and Chola Finance to buy in this market. And please make note, VIX is now below 13. Brent crude is below 78. Rupee dollar, if you see, it is below 95. What else you want? And I am telling, this quarter, once the result season start, people will be missed out, and you will see another 1,000-point kind of a move in Nifty. But you should have a stop loss of 23,800 on a closing basis. Yes, at 23,000, when I was calling market will move up 1,000 point, it was a surprise and an interesting call. But even now I'm putting my neck out and I'm telling you, the risk reward favors you to buy this dip. No doubt we have seen a 1,000-point move already from 23,000. Market is now consolidating. Keep a strict stop loss of 23,800. Every dip has to be used as buying opportunity, and I won't be surprised to see 24,800, 25,000 to come on Nifty very soon. And some of these themes and stock names what we have spoken, they will relatively do far, far better than the overall index.
Interesting. Rudra, Misho, what's the call there?
Yes, definitely showing signs of bottoming out, and this is again another stock one can look at buying at current market price. Keep a strict stop loss of around 160, and yes, you can look at targets of around 185 to 200 on this stock. But yes, looks good on the chart, and one can definitely buy.
What's the take on Vedanta now?
Rudra, what about your top trades?
For me, again, market is definitely showing selective moves where you have defense, pharma. These are some of the themes doing very good. And for the day, I will be picking Adani group of stocks, and I feel a lot of momentum is there in Adani group of stocks. One such stock which I'm picking is Adani Power, and at current market price looks a very good buy. Looking at targets of 250, 260 to come positionally if someone can hold their longs. Stock available in futures also, and even for the day, this stock looks very strong to me, and one can definitely look at going long in Adani Power.
Okay, that's Adani's, that Rudra is betting on, and Adani Power is his top idea. Kunal is sticking with defense, and HAL is what he likes. In the meantime, let's welcome on board Tushar Bora as well. If he's ready, we will get to him in just a second. But just mapping the trends in terms of, what really is holding out. And clearly, pharma is where you're seeing that concentration happen. But look at Aloris Labs as well. That's also up 1.5%. Look at the move on BDL, 1.5% higher. Mankind is higher by another 1.5% after that 5% of a move yesterday. And Alchem Labs as well is the one. So it's good to see that the pharma rally is now broadening, and some of the smaller pharma names as well are now participating in the move. Alchem holding up 1.5%, but the one topping the charts today once again is Naukri with almost a 2% move. Within the frontliners also, it's really a pharma day. DRL, Max Health, all of these names, Apollo Hospital, and Trent is the one which is actually topping the charts. Rudra, any pharma stock that you're liking for a trade right now? Mankind, Alchem, Aloris Labs?
Aisha, yes, all the three names what you told looks very strong to me, but in the list I have to pick one. On the chart, Alchem looks very, very strong. So yes, this is the stock one can definitely look at buying at current market price. And at current market price, you are also getting a very small breakout at around 5470 zone. Once Alchem crosses that 5470 zone, yes, it can move all the way till levels closer to 5650. So risk reward is very favorable at current market price to buy Alchem, and even Mankind Pharma looks good to me, Laurus looks good to me, Zydus looks good to me, and two themes again I repeat which I like a lot at current market price. One is defense and two is pharma, and some of these names which I mentioned in pharma like Zydus, Mankind, Alchem, Laurus, they all look very good. Even another stock which is only in equity, not in F&O, Granules also looks very strong to me. So this is one chart irrespective of market and irrespective of pharma index. Granules has done very, very good. But even at current market price, I'll be a buyer in Granules. One can look at 1000 as target to come and keep a stop loss of around 780. That's a great risk reward trade. So pharma and defense both looks very, very strong to me.
Pharma and defense, those concentrated pockets of wealth that you're currently seeing in the market. But let's welcome